The US stock market is about to exit correction territory, and guess what? It's the fastest in 10 years. But what's going on behind closed doors with some of the largest Wall Street dark pool transactions? Today, we discuss that along with the oil markets and the huge rebound that we saw on Friday. Hello, ladies and gentlemen, and welcome back to the special weekend edition of the Markets Around the World, where we cover stocks, commodities, and cryptos together. We'll be talking about the critical resistance points for multiple markets around the world right now, including whether we could see an island reversal for the NASDAQ, as that would be a huge momentum shift. We'll also be talking about oil coming off our most traded zone number 2. Can we see a resurgence in black gold? And more importantly, what will we see going on with the US dollar moving forward? A new low cracks what has been an exceptional trend now for quite a few months. That and more coming up in the special weekend show. Well, welcome back, everybody, to the show where we discuss macro lead indicators and the hottest charts together. If you like anything to do with markets, remember to subscribe and, of course, smash that alert button. One-day performance was cross in the markets, but financials did well. Semiconductors doing pretty good into NVIDIA's earnings result this week coming. And, of course, energy was the sector to watch. Just a reminder, we're launching our new newsletter, VIP free weekly newsletter. All you've got to do is click on the links in the description down below, first name, email address, and you'll go in. Remember, spots are limited as we're just launching it. Let's move over to the S&P 500 Performance Thanksgiving Report. Yes, this week is where we go into a period of time that tends to be a time of giving, but maybe not on the Monday. In fact, 17 up to 19 down has been the record for stock markets on the Monday percentage change into Thanksgiving. It's not that great necessarily on Tuesday either, with the average return only being slightly positive. But Wednesday turns into a much better session, along with the Friday that can have low volumes but does tend to be good. So will this week repeat what usually does occur, a weakness in the Monday session? Well, here's what happens after OPEX from our experience over the last kind of 70 years. You can see here that when we go into that 17th, 20th, 21st kind of earnings period, we know that that's where the weakness tends to lie in markets. And then there's a nice strong recovery coming through to the end of November. So if markets are going to sell, it's generally going to be very, very soon. And that's kind of in line with what we've talked about with the number 7 and, of course, 7 VIXpirations. Yes, not only did maximum pain OPEX just happen, which, of course, didn't hit some of the levels that you may have expected, and we'll talk about that later on today's show, but VIXpiration generally brings sideways markets to even down markets. And you can see in the previous periods we've seen this happen, it's been pretty negative towards markets straight after the VIXpiration. It doesn't last long, but it can be there. Here's what happens after options expiration according to the Russell 2000, which does tend to have a fairly positive kind of return for the week after OPEX, which you can see here, which is a 71% higher, but the Dow Jones only 57% higher in similar circumstances. More percentage stats coming your way. Let's go through the bull and the bear notes. The first one is, of course, bullish into the end of the year, 27 and 3 in similar situations where we've had strength through the year. So again, bulls really looking at a positive 2023, but don't worry, bears. I think 2024 might be a little bit more exciting for you, because there are some really worrying signs on the horizon if everything works out the way it used to. 50% bears into almost 50% bulls, a huge switch in sentiment reports. This is now week 2. And of course, this is usually the week where we start to see that little bit of cracking going on in the markets if we are to actually trap a few people into bearish positions. Remember, the bear positions that come through now may be short-lived due to the thrust figures that we've seen. We've seen so many Zweig thrusts, Whaley thrusts, so many different breadth statistics that are telling us that markets are actually quite bullish at this phase and at this time. Now, we shared this over on our X account, links in the description down below if you want to check it out. And this marks an incredibly important point for treasuries. Now, you might be saying first outflow of treasury funds since February of 2023, but really it's the first outflow for a very long time. You know, if this continues, that is incredibly significant. Now, you might think, well, that means treasuries are completely stuffed. Well, I posted over on our X account this particular chart here. If this shows us a continuous trend, which we just saw that big managed funds started to slowly react to less positive buying, You might think, well, that means that it's the end of treasuries. Well, the exact opposite when you're in overbought territory tends to happen. This, in fact, it can correlate to bullish periods in time for treasuries. And we'll be watching this on the channel. So definitely join us exclusively for these reports as we go through what's going on in treasuries from the biggest managed funds around the world and whether they're positioning in strength or weakness. Now, if they do continue to position into the weakness side, and this is actually the top end of treasury strength, then that is going to react totally differently to what you think. I've seen this a few times before, and it tends to always work out in the favor of the buyers, even though that might be going totally against what you're thinking right now in terms of the amount of huge amounts of liquidity that's available, no one wanting it, all the storylines and narratives that we're being fed. Well, I still think that behind the closed doors, you might be surprised. 30-year bond performance over this period of time. Of course, we've already reported that we expected yields to drop off between November 6th to 26th. So far, that is occurring. And of course, it's a great statistic there. We've also talked about if we get yields dropping off, how that could work into the Russell 2000's favor. Remember, there's like 500 companies in the Russell 2000 that don't really make that much money. If we go a lowering of long-term yields, that's going to be great for them to refinance. And of course, that could bring it back. So far after this report, this is basically where we're at in terms of the Russell 2000. And if you're feeling bullish on it, statistics would be on your side between the mid-December to January, February kind of run that we've seen several times. Now, of course, warning, this did not happen in 2022 into 23 in the same way as it has happened in previous years. Nothing is certain out there. 5 times, that's the charm in terms of months that we expect the Fed to pause. Never forget, and we'll keep talking about it until the Fed has paused, if they do in December, that when that occurs, we have never seen a rate hike cycle past that point. 5 months of hold tends to be the end of the cycle period, and that has been 100% of the time. The other thing to note is that 11 of the last 14 ended up in recession. And I think this is a really important statistic because if we break down a recession coming in 2024, what does that mean for markets? Well, first up, we need to watch US 10-year yields, and they're starting to drop. We'll look at that later on today's show because it's showing us timeframe changes of trend. And that when we go into these Fed rate cuts, remember something's broken. But don't rate cut because they're nice people. They rate cut because something broke and they need to try to quickly fix it. The Fed goes too far in both locations. Every single investor and trader would agree with that. They break something doesn't work. They're like, whoops, we better go fix that. And then they overreact in the other situation. The average sell has been pretty big. Now, I'm not sure if that'll be that big again. 23.5% average sell off after a Fed rate cut and 195 days to the low on average. 2024 is going to be super exciting, so make sure to subscribe because we'll be following that as closely as we can. Now, for bears out there, you might be saying, well, this market's got to come down. Look at all these gaps. Unfortunately, the truth is that when we get these gaps, get these thrusts and these breadth kind of hits, we do tend to see further strength coming through markets. 4 unfilled gaps over 0.5% in 3 weeks. The stats are not in your favor necessarily into the negative for the next coming months. So that is something we need to keep in mind along with this one, which is of course the slow melt up. This is exactly how the charts look right now. Huge moves after the CPI and before that, then we're now sideways at this point. If we keep melting up, and we'll look at some of the triggers that could tell us that we're melting up to new break highs, then yeah, the stats say that again, it is very, very plausible. Sell-offs may be met by instantaneous bull demand at this point. Also, just a quick reminder, jump on over to our X account and have a look at our CTA positioning chart that I've posted up there. What that's telling us is there's huge amounts of investors going back into the markets at this stage, and they've gone and done a flip-flop from huge negative positioning to super bullish positioning after the CPI numbers and everything else, and we're getting the biggest switch we've seen in some time, and that can last for a little bit of period. So we do need to be aware that CTAs are back on board in this market. Speaking of back on board, gold spot, as we've talked about before, we're of course way higher than 1860 now, but we've been talking about a multi-month run on gold. And this comes after, of course, a squeeze event. It's actually very similar in some ways to how the Treasuries trade is going. Treasuries turn negative. You might think, oh, I need to go negative. Well, not necessarily. That means that people are going, oh, it's over for Treasuries. The Treasuries, they're losing faith, yeah? Remember, Warren Buffett has that fear and greed concept, and it's just very similar to what we're seeing in gold. That could be a multi-month. Earnings in focus again this week before we go to dark pool activity, because there's a lot of trades coming into this market. We've got some big hyper growths. We've got Zoom coming out. We've obviously got Nvidia, which everybody's looking at. And this is right at the high too. Could it be the catalyst for either a sell-off or a buy? I think Nvidia is going to be in super focus. That's really the Magnificent Seven's final big number, and we'll figure out how that looks very, very soon. Russell 2000, let's go into dark pool activity. Monster trade, guys, huge position. And traditionally, this has been, I think at these points, a fairly positive sign. The Russell 2000 just getting a monster on it. And while it might not get an instant reaction off it, it certainly is there. Speaking of other huge trades coming through, I'm a little bit more worried about these ones coming into the Monday and Tuesday next week. A big dark pool transaction going straight through in the queues. That usually shows us that maybe there's a little bit of take profit targeting. We see the same thing on the SPY, 2 massive transactions going in right on these highs. It could tell us that it's just accumulation and we're breaking out. Don't get me wrong. This literally could be still buying. That's a little bit late to the party. But if it is selling and we see those signs, we'll need to be looking for the trap this week, because I'm kind of going with, if we do end up getting a sell-off and then we get this huge rebalance back up, get ready for a squeeze. It's going to keep squeezing and we'll be there if that does occur. iShares Core S&P as well, the IVV, we reported this on Thursday. Huge amounts of transactions again in on the high, again at this same level. And just to throw a smattering of single stocks, we've also got AMD, huge transactions at the high. It is possible they are buys. We're looking for price action to confirm it. Now, we talked about treasuries, and I just want to mention there's a monster trade on treasuries as well. Now, this one is at the high, and I guess you could say, well, it's going to go down after this. I feel like, for a lot of investors, they're going to be looking at it and they're going to say, well, I'm going to have trigger points. And that trigger point may have actually been to make a new high over all of this structure. Remember, where's that big transaction happen? Right at the breakout, not necessarily before that. So again, could be actually a longer term positional buy than sell. Now, this one already has been reacted to. This is the huge position coming into the USO. Oil, of course, reacting super positively after this transaction. It came in right on the close. So it shows you that sometimes you get that big reaction to it, especially when we were in oversold territory. And we warned against being too negative on oil on the Friday. And of course, it ended up going up 4% on the spot. Another one that's getting a huge transaction in at the moment is, of course, anything to do with biotech. Probably one of the worst sectors of 2023 is very reactive to yields. Now, if you believe the Fed is pivoting, if you believe that rates will continue to drop because there's a sickness in the economy, the US 10Y drops, etc., most of these businesses make no money, so they have to refinance at incredibly expensive rates. So that could be a super positive for them as well. Let's move over now to the unusual trade option activity that's been going through. And it was another day of massive calls, 57% calls, 43% puts. But I will say that this was still disappointing for OPEX. That really almost all the trade came through on Tuesday and Wednesday of this week. And that's unusual. And of course, we also saw a slowdown in Russell 2000 for the first time in a while. It wasn't above the 90-day trade average volume. Tesla getting a lot of excitement on it. Intel, of course, still coming through with a bit of rallies. And we saw Chevron and a few other big oil companies come back in. Another one was interesting that we're continuing to see some strength through a whole bunch of these kind of hyper stocks. And ARK, of course, coming back into focus. I've noticed things like Palantir, ARK, Coin, Enphase Energy, all of these kind of hyper growth style stocks, or stocks that were really hated for a while, have started to improve. And we're seeing that across some of our long short style scenarios. So we'll look at one of those very soon as well together into this weekend. Let's move over to the best performing sectors of Friday. Energy, metals, really happy with the metals trade, and obviously also excited to see biotech finally regain some strength. Gold was a little disappointing after having a great rally on it, and of course gold was the worst for the sector. But when we take a look at the last 5 days, you'll notice there's a little bit of a different scenario. What's been doing really poorly? What's been doing well? Well, we've actually had home builders continue to hold up, and we'll look at that chart because that could tell us that a squeeze is coming. I really love the metals. Even if you're a believer in stagflation and the economy going bad, metals should theoretically still do well in stagflation. And generally speaking, when metals have rallied the way that they have in the last 2 to 3 years, then you're usually in a commodities boom. Now, commodities booms tend to last 7 years on average, and they can go for a long time. A few of you in the comment section have said, what I don't believe that you should be looking at high gamma stocks anymore, things like the tech. You should be thinking about other things. Don't worry, I'm still thinking about it for all of us. We're all discussing this concept. And of course, we'll look at commodities as a super special on this channel moving forward and talk about the 7-year cycle, because it can be quite an aggressive one if it does come true. This time, of course, could be different. So we'll need